Okay, all right. Morning, everyone. Welcome back to Morning Kappa at 8. Nice to meet you. So looking at the Hang Seng Index, you can see that the index managed to move on a higher high fashions for the past 1 week. Um, so at this juncture, we still keep a bullish bias on the Hang Seng Index futures. Meanwhile, I want to bring your attentions is that you look at the Hang Seng Index for the past 1 week. I'm using the trading view. So what I do is that under the stock heat map, these functions, I change to a price time volume over 1 week and then the performance over the week. So the size of the box is basically the turnover, right? The more volume, the more money traded in this counter, the box will become greater. So you can see that for the past 1 week, most money that actually traded 9988, which is Alibaba. Now, secondly is Meituan. Thirdly is the MI, Xiaomi 1810. So these three big tech counters averagely have give a returns about 3%, followed by the 9992 PopMart 8%, and then this 2899 which give a 6% return. This is the Zijing mining, which is in the gold related counters. So you can see that over the 1 week, right, the money are actually rotating out from the banks 939, 388, right? They are moving into tech counters. So remember what I mentioned to you, right? During these corrections, this is where the tech stock have a corrections and the money went into the shelter, into the banks sectors. And right now they are from a defensive counters. They are coming back to the tech counter. So hopefully the momentum continue, right? The tech can lift the index higher to reach their 20 days moving average and followed by a 26 500 point, which is the overhead resistance. So in the bullish setup, right, we do believe that the index should move on a higher high fashions. Now, meanwhile, to mitigate your downside risk, right, which set a stop loss at this immediate support, which is the 25,000 point level. So you want to have a bit of the return and looking at the higher beta tech counters. Then we'll look at the Hang Seng Tech Index. So over here in the Tech Index, we can see that the Sunny Optical 2382 have bounced by 6% over the week, and then the 9999, which is the NetEase Wang Yi, have moved out by 5%, and then on JD.com 4.55. So you can see that the tech sector are getting more and more momentum, and one counters which is 9660 Horizon Robotics, which they just joined the Hang Seng Tech Index lately, right? Also went up by 10% over the week, right? So you may want to use this heat map, right, to catch some of the trading opportunities, right, in the Hong Kong market, be it the Hang Seng Index component or the Hang Seng Tech Index component. Okay, and looking at the US market, right? Yesterday, the market have a slight pullback, right? As the markets worried about the interest rate. We can see the in the US market, the SOFR have went up overnight. Bank lending rate have went up by the uh, break past the 4% threshold, right? So the market have a pullback, worried on the short-term liquidity. But overall, you look at the SPX, which is S&P 500, right? The structure remains bullish. Last week, the XPX managed to break the weekly resistance. So this week, we raised the weekly resistance to somewhere at 730, 7030, right? Based on the uh, degree that they have moved, right? And this is what I'm using the weekly ATR. Right, so on top of here we have the weekly movement, and we also have the Fibonacci resistance, which is 6850 and 7000 level, right? Nevertheless, on the downside, I still keep the stop loss at 6350, which is very far away from the 6008 we are here today, right? So as long as the SPX, right, stay above this 6350, I think the overall, right, setup in the medium to long term, right, remains bullish for the XPX, which is the S&P 500. Okay, so over the week, we can see that the most bullish stocks in the market is the Tesla, AMD, right, Coinbase, and also the uh, app loving, which is the tech software company, and Palantir, right? They all went up. Also, the Broadcom, Avago went up by 11%, right? So you can see that the big tech counter continue to lead the market higher. But overall, you can see that apart from the big tech, right, most of the S&P 500 over the week also registered positive gains. So I do believe that in terms of market, they call the breadth, right? The most of the stocks are also undergoing a positive price actions right now. So likelihood the momentum should resume, right? And the XPX likelihood to move higher, testing the 6850 either this week or next week, right? And as of another instrument, I want to bring attention, which is the gold, right? Gold have steadily moved upwards recently, right? In tandem with the silver prices. And they have breached past the 4002 level as of yesterday. So the momentum remain strong so far. Now, another indicator I want to share with you is the real bond yield. So if you are looking at the technical chart reading, right, what you always want to find out is how do we look out for the leading indicator. So if you look at a gold price chart and then you try to overlay all the indicator, be it moving average, RSI or MACD, right, you can't find a leading indicator because all these indicator actions of the goal. So basically, the real bond yield, the formula is the difference between the bond yield, US 10-year yield, and then the 10-year expected inflation rate. So in this difference, this is the price chart pattern. So I just want to share with you this chart have an inverse relation with the goal. So if this guy go down, the goal will move up. So as of yesterday, you can see that this guy have actually went up. So I do think that today, the goal will have a little bit of profit taking. But overall, you look at the last 4 to 5 months time, right? This real bond yield is actually moving downwards. So when this whole real bond yield is moving downwards, right, it shows me that the gold should moving upwards. So even though gold have a very strong corrections in the early October, right? And that's where in our report we mentioned that this corrections is merely a healthy corrections, a healthy pullback within an uptrend. So how do I know this thing is actually uptrend intact? So I'm using one of the leading, which I use is this real bond yield as my indicator to let me know. And in fact, in this real bond yield charts, I have the 20 days, 50 days, and 200 days moving average. It tell me that where this real bond yield is actually moving to. So by using these two charts together, right, so I have a more holistic view where the gold is actually moving. If you're looking at the fundamental reports, there will be always a bullish case and there will be always a bearish case. But as a technical, right, what we want to see is that have a double confirmations, another you can say this is a leading indicator, but I would say that another charts to actually double confirm where the direction is. Okay, so despite that today, the real bond yield have a rebound, right? There could be a mild profit taking today, but overall, I'll still keep bullish bias, right? Unless the gold falls below this 3,008. So I hope that you learned something over here. And these are some of the US stocks in my watch list. Nothing much changed since October, November until today, right? And as for the FKLI, right, yesterday was the first day of trading, right, after the end of the month last Friday. Initially, the sentiment was a bit weak, right, open lower, but eventually the FKLI managed to close higher and climb above the 50 days moving average. So overall, we still keep a bullish bias, and also late yesterday, price actions have show us that 1,006 is a very important support level. So I will move up our stop loss from 1570 to 1600. Now, meanwhile, the FCPO bullish momentum failed to follow through yesterday. 4150 remains the immediate resistance, and we'll keep a stop loss at 4250. We stick to a bearish bias on the FCPO. So tomorrow, I'll share with you the leading indicator on the FCPO, right? And then on, as for the some of the trading stocks this morning, right? Firstly, we'll be looking at the Life Water Sabah, MPI, PLS, Sitcom, CIMB, MSC, and SNS. So you can see that yesterday the market sentiment lifted by the CIMB, right? Our bank analyst David also remains a buy call on the CIMB. The most important thing is that the CIMB has been consolidating for at least the last 2 months, and on the breakout here, right, this as a very heavy component of our index, right, it lift our index higher. Now, in fact, you look at the price volume profile, right, some time ago, right, we have set 720 as a breakout point, and as long as stay above this 720, right, the CIMB should see upside movement, which likelihood is going to test the 8 ringgit breakout should see 8.30 cents, right? Then on Aqua Walk, right? The share have just listed almost about 2 weeks old, right? You can see that there's a bit of volume here showing that 37 cents is where heavily traded for the last 2 weeks, right? So as long as this Aqua Walk stay above 37,355, right, it may move higher towards 40 and 42 cents. Now, meanwhile, this afternoon, 1 p.m., we have invited the management of Aqua Walk to give us a company briefing, right? This is the first briefing they do with the brokers in town. So do sign up for this event this 1 p.m. All right, let's listen and ask questions to the Aqua Walk management. What's their investments merits? So from a technical perspective, I do see 37,355 acting a very strong support level for Aqua Walk right now. Meanwhile, yesterday, right, Sitcom have reacted positively, went up with a strong volume, long candlestick after they published their result last Friday, right? And you can see that based on the latest candlestick, right, you can see that the support level is 117 and 112. Right now, if you are those intraday trader or short-term trader, right, you can actually look at the Sitcom since the momentum is strong right now, right? 125, 130 would be their immediate resistance. And then on another counters that Iman have actually published in his report about 3 weeks ago was MSC. Now, after they have released their results, right, the MSC finally have a breakout above 150 yesterday, heading towards 160 and followed by 170. Now, again, you look at the price volume profile, right? Quite a lot of volume has been traded here. And safely to say the 140 is a very strong support level for MSC. So as long as stay above this 140 level, right, MSC should test the next resistance at 160 and followed by 170. Okay, then on live water have staged a very strong breakout, right, heading towards 155, 163, right. I think the nearest support is actually at 134 so far. So you can see that the market have reacted positively to these few counters after they have released their this November results. As for our trading stock report this morning, firstly, we look at the PRS plantations, right? They break past the 45 cent and a half, right? Now, this resistance has been a multi-month resistance, and after the breakout, right, they will be testing the 52 cents and followed by the 58 cents. Downside support is marked at 40 cents. Secondly, we have the SNS network. Yesterday, right, it charted a bullish candlestick on the back of high volume. So it break out from 65 cents, then the bullish buyers shall emerge. The fresh momentum should propel the SNS towards 70 cents and followed by 75 cents. Downside support is at 59 cents. So we have one breakout stock, PRS plantations, and then one pending breakout SNS network. Okay, so I'll stop here and pass on to the Alex on the latest result wrap. Thank you.
Whoops, hang on a second. Just let me share my screen. Okay. Morning, everyone. Thanks for dialing into the call this morning. Just let me run through the recently concluded September quarter earnings review for the markets. And I think if you look at the sigh or rather the relief rally yesterday, the conclusion is that markets have navigated past this September quarter reporting season without any kind of major concerns emerging or any kind of negative trends on the sideline. So the results were broadly in line, and I think overall we continue to be constructive on the outlook for equities going into 2026. I think right now the issue here is what the Sabah state elections mean for whether the possibility of an early election. But I think the key strategy here going forward is to look for opportunities to build positions at lower levels. Given that the two key risks to this positive backdrop is a pullback in U.S. financial markets and also a possible pullback in the U.S. economy. Given that we haven't seen any real economic data coming out from the U.S. Bureau of Labor Statistics for a couple of months already since the government shutdown. And right now, the markets are flying blind a little bit, and the data for October, November is going to be announced only the week after next week. Which means that next week's U.S. FOMC meeting is going to be without the benefit of the October, November data, which is delayed until mid-December. So it'll be interesting to see the numbers, right? So buy and weakness will probably be the key strategy here. Okay, now going back to the September quarter numbers, I think overall, pretty decent. With the three sectors missed expectations, two beat. I think similar to what we saw in the preceding June quarter. Also, three misses, two beats. Overall, for the RHB universe, we saw mild earnings, negative earnings revisions, 0.4%, 0.3% for this year, next year. And I think if you look at the details, 26.6% of earnings missed 19% beat, which means that the misses to beats ratio has now come down to 1.4 from 2.8 in the preceding quarter, which is a good thing. The lower the number, the better. Okay, and obviously this is a distinct sequential improvement, compared to the preceding quarter. So plantations and property exceeded expectations. Energy, rubber products, and gaming disappointed. And in terms of the contributors to the earnings, the negative earnings revisions, the perennial contributor to negative earnings revisions has been Petronas Chemicals over the last year and a half, 2 years. This quarter was no different, where they reported a loss for the quarter. In addition to Tenaga National and also IHH Healthcare, and in addition to a number of consumer names. These cuts were offset by positive revisions to, in plantations, construction, and basic material sector. Okay, in the large cap side, also modest negative earnings revisions, given that the contributors to the earnings cuts of big caps, 0.6% down 2025, 0.4% down 2026. Biggest cuts, as I mentioned, PChem and Tenaga, offset by positive earnings revisions at STG, Gamuda, and Press Metal. I think if you look at forward guidance from the management, pretty decent. Cautiously optimistic is how I would describe it. Banks cited improved clarity on tariffs for the pickup in loan applications, coupled with strong deal pipeline, and there were a few warning signals on asset quality. And banks also continue to see potential capital management opportunities. Elsewhere, consumer confidence still positive, helped by fiscal initiatives, cuts in OPR, and also the strong ringgit. So as I mentioned earlier at the beginning of the call, we are constructive on the outlook, but look to buy on weakness. So right now, we are looking at about mid-single-digit earnings growth for 2026, and hopefully on the back of this reasonably robust September quarter corporate earnings performance. I think the December quarter, we also shouldn't expect too many negative surprises. So that's pretty much a wrap on 2025 for the most part. So we look forward to 2026, and the key message here is to buy at or look for opportunities to buy at lower levels. Okay, that's it from me. That's it from us from Morning Kappa 8 for today. Please dial in again tomorrow for the next installment. All right, thanks everyone. Cheers.